Welcome to the final video of the Study Abroad program. In this video, I'm going to talk about the financial and economic system of Switzerland and hopefully explain to you why I'm just so excited. When we were planning the Study Abroad program, Dr. Wallace was really adamant that we would go to Berlin, and that makes a heck of a lot of sense. That is a great place to study economic history. And when it came time to choosing a second country, Switzerland was at the top of my list because it is so economically and financially powerful and so unique. And so I'm hoping by the end of this video, you'll really understand why it's a great place to visit if you're interested in finance. Before we get into specific finance details, I want to real quickly talk about the geography of Switzerland because I think it really shapes the way it has behaved on both a political standpoint and also in terms of how it reacts now in the financial world. Switzerland is basically fortressed by mountains, rivers, and lakes. On its south and east sides, you've got the Alps there, and obviously those are very formidable locations geographically. It's pretty difficult to get from, say, northern Italy to Switzerland. Nowadays, you can use trains, you can fly, but if we go back prior to those types of innovations, it's really difficult to transport things across the Alps. To its west, to its north, you've got rivers, you've got lakes, and that makes it really isolated in the sense that it was in the past relatively difficult to trade and also relatively difficult to invade this area. And you can see that Switzerland, if you compare that map on the left to the map on the right, all I've done there is draw a little line to kind of show the border of Switzerland. And you can see that without even that border drawn, it's pretty obvious where Switzerland is located based on those natural formations that have shaped its borders. As a result, partially of that geographic isolation that Switzerland naturally has, and also as a result really of just random chance, Switzerland has found itself in this precarious position throughout much of its modern history. This shows World War I, what Europe looked like at the start of that war. And you can see that Switzerland is in this weird position where it's got these political and military powers surrounding it. Um, it could have chosen a side, right? Switzerland could have said, look, we're going to always align with France, for example, but that would have left itself really vulnerable to attacks from these other countries. So, as a result of this, Switzerland has really, since the 1800s, maintained a neutrality. Switzerland was neutral in World War One, it was neutral in World War Two, and I think that neutrality shapes the way it's maintained its socioeconomic behaviors since those wars, and also how it's determined its financial system. Switzerland's formal neutrality can be tracked back to the early 1800s, specifically to the Congress of Vienna, which is a really important period in economic history following the Napoleonic Wars, when a lot of these countries in Europe got together and pledged to be really to stop fighting and also drew some of the boundaries of the European countries that a lot of those boundaries still stand today. So, for example, in Switzerland, its boundaries were drawn a little bit differently after the Congress of Vienna, and it actually gained a little bit of land. But within that Congress of Vienna, the other countries formally recognized Switzerland as being neutral, and it has maintained that neutrality all the way to present day. It stayed neutral during World War One, and it stayed neutral during World War Two. Now, this wasn't without its problems, as was discussed in that early video. Some of Switzerland's decisions to stay neutral were highly criticized by the other nations within Europe and throughout the rest of the world. Neutrality means, when Germany is trying to take over the world and spread Nazism, Switzerland stayed out of it and even continued engaging in financial interactions with Germany. So neutrality definitely has its cost, but it has kept Switzerland out of these wars, which has allowed it to gain economic prosperity over the years. Perhaps as a direct result of that decision to stay neutral, Switzerland's financial system is very different from most of the rest of the area that you would expect to be part of the European Union. As we've shown on earlier maps, Switzerland is surrounded by countries that use the euro, but it does not, which is one of the main reasons why I wanted to visit Switzerland in the study abroad program. Now, Switzerland is not technically a member of the European Union, but it does have a lot of bilateral agreements with the European Union. Nonetheless, people in Switzerland still don't want to join. 65% of European citizens, or excuse me, 65% of Swiss citizens oppose joining the European Union, which is pretty unique given the fact that most other developed countries in Switzerland either are members of the European Union or have had some serious disagreements about whether or not they want to join. In Switzerland, you can see there the vast majority of citizens do not want to join the European Union. The primary reason for that is really that things are so good in Switzerland and it wants to maintain both its neutrality and independence. And that is probably good. You could think of this as having a positive externality for many of the other nations in the world because Switzerland's decision to maintain neutral has allowed it to be a mediator in other political conflicts that have happened in Europe. And that is something we might expect to see in the future, right? If France and Germany or if France and Sweden can't get along or can't make a decision about their financial systems or other political factions, Switzerland is a good place to hold court and figure out a way to solve some of these conflicts. But perhaps more importantly than that, Switzerland has maintained a really strong financial and economic system. And when you got things that are functioning so well, maybe you don't want to mess with them. So Switzerland is an absolute economic powerhouse. It's really more developed than the United States even, and that is something you probably don't want to mess around with. You can see that here in terms of real GDP per capita. So if you're not familiar with GDP measures gross domestic product, which is just how much production a country has within its borders. Per capita is breaking that down on a per person basis, and real means adjusting for inflation. You can see the top line there is the real per capita GDP of Switzerland, which is about 90,000 US dollars today. Comparing that with both the United States and Germany, you can see just how economically advanced Switzerland is. The real per capita GDP of Switzerland is far beyond the United States and more than double that of Germany. Once you take prices into consideration, this is showing purchase price parity. Once you take prices into consideration, that advancement in real per capita GDP does get mediated a bit. The United States and Switzerland are pretty similar in terms of real per capita GDP once you consider the effect of prices. Now, you're going to feel this in kind of a painful lesson when we're in Switzerland. Things are going to feel very expensive, okay? You will have never been to a place that's as expensive as Switzerland, aside from maybe some touristy areas in the United States. That being said, you can see that this is a relatively new thing. If you go back to 1990, the real per capita GDP of Switzerland, even after controlling for prices, was much higher than the United States. But the United States has caught up to Switzerland over time. And that's what you would expect to see. There's really no compelling reason why one country should be richer than another. We all have very similar genes, so it's not the fact that people in Switzerland are just designed to be more economically advanced than us. It's not like Switzerland has significant natural resources that we don't have in the United States. In fact, it's really quite the opposite. Switzerland doesn't have a lot of natural resources. It has very little oil. Raw materials like gold and silver are not naturally abundant there, but it has significant human capital, great education system. It's avoided war, which has allowed it to maintain a lot of its physical capital. And so what's really unique about Switzerland compared to the United States is if you go to Switzerland 30 years from now, you're going to find a country that was extremely economically advanced. You go back 60 years ago, it's really not going to feel that different in terms of economic advancement. But of course, what has made it economically advanced has changed over time. Switzerland has always been on the cutting edge of technology, and it maintains that way today. And we'll see that when we discuss cryptocurrency in Switzerland later on in this video. Alluded to before, Switzerland has great success. Its financial system is really well developed. Some little facts here about that related to its success. Its currency, the Swiss franc, is universally recognized as a safe haven asset. What that means is wealthy individuals, corporations throughout the world, governments throughout the world will hold Swiss francs as a safe asset, kind of to hedge against problems they might have in their own economic systems. Um, that maybe doesn't sound like such a big deal because we have something similar in the United States. A lot of foreign countries will hold US dollars in the same way. But keep in mind, Switzerland's tiny. The population of Switzerland is lower than the state of Georgia. So it's really amazing that such a small country can be so important on a global scale. Its national bank, similar to our central bank, the Federal Reserve, its national bank has this really strong history of making good financial choices. It's got an interesting way of running its monetary policy, and we're going to get into that in a little bit. Its government has relatively low debt levels and have seemed to handle financial crises better in a lot of ways than the United States. And in general, it's just a global financial hub, which I'm being repetitive here, but again, is just so impressive when you're talking about a country that is so small like Switzerland. Get into it here. Let's talk about the Swiss National Bank, which is the central bank of Switzerland. The Swiss National Bank oversees the monetary system for everybody in Switzerland, which there's about 9 million people that live in Switzerland. Compare that again to the state of Georgia, which has about 12 million citizens. And so that'll kind of give you an idea of its size. But interestingly, the Swiss franc is also the official currency of Liechtenstein, which is a small country just east of Switzerland. By the way, if you're trying to knock as many countries off your list as you possibly can, we do have that one day off in Switzerland where we don't have any formal events. You could take a train over to Liechtenstein just to check it out. It's a very small country that uses the Swiss franc as its currency. There's also a really small region of Italy that is totally surrounded by Switzerland that uses Swiss francs as its primary currency. So that's the countries and entities that use Swiss francs as their primary currency. The Swiss National Bank, even though it's managing a relatively small population, is really massive in terms of its economic impact. You can see that partially in its assets. It holds the 9th most assets of any central bank, despite being ranked 102nd in terms of its population that it manages. It's also the 8th most traded currency in the world. Swiss francs really punching above its weight there. In terms of what it's really designed to do, the 3 key things that it's trying to do as a central bank is, one, most importantly, maintain stable inflation. That's similar to the European Central Bank. That's also its primary goal in terms of managing the euro, is to keep inflation low and stable. That's the primary goal of the Swiss National Bank as well. It uses inflation forecasts to drive its policy, so it's forward-looking, thinking about inflation, and it engages in monetary policy through interest rates, and totally unique from what we've seen in the Federal Reserve policies or the European Central Bank. The Swiss National Bank uses not only interest rate policies, but also exchange rate adjustments to guide its financial choices and financial goals within its country. The decision-making body of the Swiss National Bank is comprised of these 3 individuals here, a chair, a vice chair, and a member. And what we learned about the Federal Reserve and the European Central Bank is pretty similar to what you see here. These are people that have a lot of training working in monetary policy. A lot of times they're academics. There's nothing too interesting about that, but I do want to point out that these people here, these 3, they're appointed by the Federal Council. And one unique thing about Switzerland is it doesn't really have a head of state the way most countries do. Now, it technically has a president, but really there's a board of 7 individuals that do all the executive policies for the nation. They're called the Federal Council. And that Federal Council is who elects these 3 individuals that run the Central Bank of Switzerland. Key policy tool in Switzerland for the Swiss National Bank is its policy rate. Kind of like the Federal Reserve. The Federal Reserve uses the federal funds rate as its key policy. It's kind of like that, but you'll see it's also a little bit different, okay? It's not like a literal rate, the way a lot of the interest rates are in the United States with the Federal Reserve, right? For example, the discount rate is a set rate in the Federal Reserve system. The Swiss policy rate's kind of like that, but it's more encompassing of all interest rates that banks face in their country. Specifically, when banks want to borrow, one option is to borrow from the Swiss National Bank. In the United States, that's like the discount rate, right? If banks want to borrow from the Fed in the United States, the rate they're charged is a discount rate. If banks want to borrow from the Swiss National Bank, they'll borrow at a rate that is similar to the Swiss policy rate. Likewise, banks can save money at the Swiss National Bank. This is like in the United States when banks hold money at the Fed and they earn interest on that, which is called the interest on reserve balances. Again, though, there's not a specific exact rate that is held through time. Rather, whatever the Swiss policy rate is will serve as guidance for what the Swiss National Bank will pay to these banks when they hold money there. And thirdly, when banks borrow and loan to each other, that's like the federal funds market in the United States. But again, the rate that is being charged by these banks is not a set rate. So the Swiss policy rate is guidance for all of these key rates that you see listed here. So the Swiss National Bank might announce that it's going to drop its policy rate down to 0.25%. And what that means is all of these rates you see here are going to be moved down to something like 0.25%, but not necessarily exactly 0.25%. I hope that makes sense. The Swiss National Bank also does engage in some open market operations, which is buying and selling stuff, but they are on very quick terms. So these are usually like overnight loans. Like the Swiss National Bank will buy something and then they'll sell it right back a day later. That's not nearly as important as open market operations are for the Federal Reserve. Back to those key policy rates, you can see here, this is the Swiss policy rate through time. Over on the right-hand side, you can kind of see what's going on now. The Swiss policy rate is right at 0.25%, and it's actually been dropping through time. This is pretty different than what we've been experiencing here in the United States with pretty high interest rates. Interest rates are very low in Switzerland, and Switzerland's actually trying to increase inflation. Inflation rates are very low in Switzerland right now, so the Swiss National Bank has been lowering interest rates to try to stimulate increases in monetary in money creation and also to raise prices. Now, to kind of hint what we're going to talk about in the future of this video, look on the left-hand side of this graph. You can see the Swiss policy rates have actually been negative at some periods in its history. We'll get back to that. While the policy rate is the major tool and primary tool of the Swiss National Bank, it also uses currency manipulation as a way to maintain its important status from a global financial standpoint, and also to stabilize its economy through time. Now, this is different from a lot of other countries, right? In the United States, we pretty much have free currency movements. And what that means is the value of the US dollar just free flows based on market forces. Other countries like Denmark peg their currency to other financial systems. So Denmark's currency is directly connected to the euro. While they don't use the euro, its currency value changes exactly in tune with what's going on with the euro. Switzerland uses kind of its own unique system where it uses currency manipulation to change exchange rates through time to stabilize its economy. To kind of give you an idea of how this would work, let's say the Swiss National Bank thinks the franc is overvalued, that it has gained too much value from a global standpoint. What it will do is take francs and use francs to buy foreign currency. In doing so, it makes francs more available globally and makes the foreign currency less available globally. In turn, the Swiss franc will lose value relative to that foreign currency. So, for example, if the franc is deemed overvalued relative to the euro, the Swiss National Bank will create francs, buy euros with those francs, and now the francs will lose value. This is important because since the franc loses value, its real exchange rate will also adjust, and now Swiss goods will look relatively cheap on a global scale, and that'll boost exports. It's kind of complicated, so let me say it again how that works. When the franc is deemed to be too valuable, it's hard for Switzerland to export goods, right? Swiss goods will look really expensive. To make those goods look cheaper on a global scale, Switzerland will take francs, print new francs, use those francs to exchange for foreign currency, and now Swiss francs will become less valuable, which will make Swiss goods less expensive on a global scale, boosting exports. It could use a similar but opposite policy if it wanted to cause the Swiss francs to gain value, but that's usually not a typical problem in Switzerland. Typically, the problem that is deemed by the Swiss National Bank is that the franc currency is too valued, it's too expensive, and it will try to do things to reduce its currency valuation. As a result of these types of policies, the Swiss National Bank has been buying up foreign currencies through time. It holds $800 billion in foreign currency, primarily through its other exchange partners via the United States or the euro. In the United States, we don't do this type of thing. We don't do these types of foreign currency manipulation. So as a comparison, the Federal Reserve, which is obviously an absolute juggernaut on a financial scale, only holds about $25 billion in foreign currency. This is a very unique feature of the Swiss National Bank, the way it uses currency exchange to manipulate its value on such a grand scale. Now, this results in a lot of criticism from foreign countries, including the United States. Switzerland is manipulating currency exchange values to make its exports increase relative to other countries. The United States has been critical of this and has officially called Switzerland a currency manipulator in the past, which is not something we accuse other countries of doing very often. But I must admit, I think that this is maybe a little bit unfair because Switzerland is in a pretty unique situation. Now, China does currency manipulation as well, or at least it did in the past, and I think it really was trying to unfairly take advantage of its situation. But Switzerland's really in a unique situation because during recessions, foreign countries and foreign entities will try to hold as many Swiss francs as possible. So during recessions, Swiss francs value will go way up. It will appreciate relative to foreign countries. As a result, Switzerland is subject to significant economic shocks. When there are recessions at a global scale, it becomes harder for Switzerland to export goods. As a result, Switzerland really has no choice. It's got to engage in these currency manipulations to maintain economic stability within its nation. So it's really a unique situation that Switzerland is in. Now, United States, we also have a similar situation. When foreign countries go into recessions, people and entities within that country will try to hold US dollars as well. But what's different about that is the United States economic system is so massive that we can absorb these types of economic exchanges happening. Switzerland is tiny. It's harder for it to maintain stability when countries are exchanging its currencies so rapidly. So it does make sense that Switzerland has to engage in these types of policies. So now that we have some idea of how the Swiss National Bank runs and how Switzerland operates as a whole, let's talk about some really interesting and really weird facts about Switzerland. Foremost, let's talk about gold in Switzerland. Now, there are two types of financial systems that countries can employ. One is a commodity system. Commodity money is money that has value in and of itself. That's like gold coins. Or countries can use a fiat system. A fiat system is where the money doesn't have any value in and of itself, but people trust that it's worth something. That'd be like a $100 US bill, right? $100 in US cash is only worth $100 because we trust that it is. Prior to the Great Depression, most developed countries used a gold standard, which meant that all of the currency was backed by gold. But this proved to be very problematic during the Great Depression. During the Great Depression, people didn't want to spend their money, and as a direct result, currencies and gold went up in value. All right, so if you had a bunch of gold coins, those gold coins were going up in value on a day-to-day basis. Think about what incentives that creates, okay? When gold is going up in value, that means that prices are going down in value relative to your gold. That's deflation. And when deflation occurs, that incentivizes people not to spend their money. Think about that, right? If you have a bunch of gold coins or money that's backed by gold, it's really smart to hold that money because you know it's gaining value through time. This is horrible for economic activity. If people are holding their gold, holding their currency, people aren't spending, and this hurts business activity. So, in order to try to stimulate the economy and help get things back on track, most advanced countries during this period completely eliminated the gold standard. In the United States, we mostly eliminated our gold standard, but there was some gold backing our currency all the way up until the early 1970s. Now, in Switzerland, they were the lone country that maintained a semblance of its commodity-backed system all the way up until 1999. They were the last country to abandon a gold standard. And even all the way up until 1999, 40% of Swiss francs were backed by gold. As a result, today, Switzerland still has lots and lots of gold, which is very unique. Second really interesting fact about Switzerland, it has experienced negative interest rates in its recent economic history. Now, this is a very interesting fact because really, economists didn't think this was possible. Prior to the Great Recession of 2008, the general view among economists was that negative interest rates wouldn't work. Let's think about why that would be the view. Imagine your bank announces that they're going to start paying an interest rate of negative 1% on your checking and savings accounts. That means if you have $1,000 held in that bank, that $1,000 is actually eroding through time. So if you leave $1,000 in that bank for a year, you would have $990 at the end of that year. Well, what would be the incentive there? You guessed it, it would be to hoard your money, right? You might hold your money at your home, try to keep it in a safe place at your house. Because if you hold the money at your house, it's earning no interest, which is better than negative interest. Now, Switzerland wasn't the country that innovated this policy. The first country to try negative interest rates was Sweden. But Switzerland jumped on board in 2014 and actually maintained those negative interest rates for several years. See that here, going back the last 10 years in Switzerland, interest rates in Switzerland were at negative 0.75%. Now, when I say interest rates in Switzerland, what interest rate do you think I'm mentioning there? Okay, this is the Swiss policy rate, right? The Swiss policy rate is the rate that banks generally borrow and lend to each other, and the rates that banks can generally borrow and lend to the Swiss National Bank. They guide all of the rest of the interest rates in Switzerland. Now, the Swiss interest rate of negative 0.75% was increased finally during 2022, but there are discussions now that they may have to go back to a negative interest rate yet again in the near future. Talk about how this works on a functional standpoint, okay? If the Swiss National Bank sets policy rates at negative 0.75%, that means that banks can borrow from the Swiss National Bank at negative 0.75% or about that figure. Now, if they can borrow from the Swiss National Bank at negative 0.75%, they would never borrow from any other banks at anything more than negative 0.75%. So you end up with negative interest rates on bank-to-bank lending. Now, that might seem kind of crazy, but keep in mind that as long as banks can borrow at negative 0.75%, they can generate a profit by loaning money in anything higher than negative 0.75%. So it's possible that you can have negative interest rates on all types of loans throughout the economy. That being said, banks have many ways to profit off of customer deposits, right? If you have a checking account at a bank, they profit off of any kind of debit transactions you make. They might also charge you overdraft fees or bank maintenance fees. As a result, checking accounts in the Swiss national system were pretty much always above 0% or at 0%. So this means if you're a Swiss citizen and you have a checking account at a bank during this period where there were negative interest rates, you probably weren't earning negative interest rates. Instead, checking account rates were right at 0%. And that's similar to what happens in the United States as well. During the same period, checking account interest rates in the United States were 0%. However, there were some negative interest rate accruing accounts. So if you were somebody with a lot of wealth in the Swiss system, and for example, you wanted to hold 10 million francs at a bank, they would oftentimes charge a negative interest rate. And you were willing to pay it because what else are you going to do? It's really risky to hold 10 million francs in cash at your house. So to keep them safe, people would pay a negative interest rate in order to hold their money. Kind of hard to imagine because we don't have anything like that in the United States. Now, mortgage rates, as an example of what happens to interest rates in the economy, they never got to negative rates in Switzerland, but they did get very low during this period where there were negative interest rates at the policy level. You can see here that mortgage rates, whether you're talking about short or long-term mortgages, got down to a rate even below 1% around 2021. And today, mortgage rates in Switzerland are still very, very low. This is obviously quite different than what we see here in the United States, where interest rates are much higher on mortgages. Bog you down with a whole bunch of information, but I do want to expose you to other things that we might see discussed while we're over there in Switzerland. Credit Suisse, a giant bank in Switzerland, totally collapsed just a couple of years ago. I'm sure that's something that is going to be discussed while we're in Switzerland. If that's of interest to you, study it a little bit before our trip. Swiss banks, they have a history of providing complete secrecy to people who deposit in their institutions. In the prior video you watched, you should have learned about that. But that is something that explains why so many outsiders have chosen to hold money in Swiss banks in the past. That secrecy is highly valued by wealthy citizens. In fact, 1/3 of the world's private liquid wealth is held in Switzerland. Imagine that. Again, this is the country with a population that is smaller than the state of Georgia, yet 1/3 of the world's private liquid wealth is held in Switzerland. It's an amazing fact. Furthermore, as we talked about before, the Swiss National Bank still has some ties back to that gold standard, which it held all the way up until 1999. Switzerland has more gold per capita than any other country in the world. In fact, the Swiss National Bank alone has more than 1 million metric tons, which is greater than 1,000 US dollars in gold per person. On with our fun facts of Switzerland. The Swiss Stock Exchange is very important. It has a market cap of about $2 trillion, which means it is about the 20th largest stock exchange in the world. Again, very impressive for a country that has such a small population. Some Swiss banks, they hold their reserves in underground vaults or even in bunkers built in the Alps. Security and safety in Switzerland has long been a standard for these banking systems, which is part of the reason why people are so willing to hold their money in Swiss banks. Swiss regulators are very supportive and clear with cryptocurrency guidelines. So if we think about the United States, there's kind of been this contentiousness about the federal government and its attitude towards cryptocurrency. In Switzerland, much more open with cryptocurrency, and the regulations have been much more lenient. And as a result, Switzerland is known as being a crypto hub on a global scale. It's a big deal in Switzerland. In fact, 29% of cryptocurrency held in Europe is held in Switzerland. And the city of Zug, which is really a small city, only about 30,000 people, it was the first city in the world to accept crypto for municipal payments and is now known as a major player in the cryptocurrency game. Now, the city of Zug, it's not really that much bigger than Milledgeville. Imagine if Milledgeville was known globally for its cryptocurrency use. It's really an amazing factor. And again, if we're thinking about places we might want to visit during our day offs, Zug would be an interesting option. What you learned about this video has explained to you why I'm so excited to visit Switzerland and why we chose it as a place to visit as part of our study abroad program. Now, I encourage you that you go beyond the research that I've included here. If you really want to enjoy your time in Switzerland and get as much out of it as you possibly can, do some outside reading. Doesn't have to be super formal, right? Go to the Wikipedia pages and read. Go to YouTube and search for videos. It doesn't have to be formal, but spend a little bit of time learning about Switzerland. It will make your time there even more valuable. I hope that you've enjoyed this portion of the class. I hope it hasn't been too painful, and I guess we'll see you in Switzerland.